Welcome back, everyone. An incredible week in markets with powerful tools that pave the path for where we are right now. If you take a look at the two charts that are on screen right now, what you're looking at is the S&P 500 E-minis, and you're looking at it on a daily candlestick basis right over here on the left-hand side of the screen, and on a 4-hour basis on the right-hand side of the screen. Now, we've got a very powerful, straightforward toolkit applied to price action, and you can see that we fired off a TRP buy signal back in the early part of January on the daily chart. It came with a target 1, a midline, and of course a target 2. We've achieved that, and in fact achieved that target 2 right away at the beginning of this week, actually on Monday. Now that was follow through from last Friday's burst higher, as you can see that green candle I'm highlighting. After that, the dip down on the hotter CPI data, and then of course the bounce back up, leading to another small selling today on hotter PPI data, which is the producer price index data, has created a range-bound market that has already hit a target and is still operating off of a very important negative momentum shift that I'm going to highlight for you right down over here. Now, on Tuesday, when the CPI data came out negatively and prices moved down, the daily charts trend, well, still clearly up, right? There's no question about that. But we've already hit that target too, and we're not running away currently. We're not above that target too. That negative momentum shift down over there did not go away. And in fact, that is something that I mentioned in videos just like these throughout the week. It is still something that is a concern. Now, that has effectively led to where we are into the end of this week. You're looking at the 4-hour chart on the right-hand side of the screen. You can see that right over here. And when you look at the price action through February the 14th, 15th, and today, we did get a buy signal, a TRP buy signal, with a TRP momentum crossover dot, giving us a rise back up out of that CPI dip that we had on Tuesday, of course. Now, the follow through to the first target area worked out wonderfully well. We got up to that 50, 55-ish area. However, getting further and continuing has been an issue. The data flow this morning caused an issue, and the data flow came in hotter for the producer price index data, implying that monetary policy is less likely going to be acting favorably sooner. We also got some retail sales data earlier this week that was not very favorable. Put that all together, take a look at the second last bar on that 4-hour chart that looks out 3 to 5 days. You've got your TRP sell signal with a target 1, midline, and target 2. Now, vis-a-vis where the market ended the day in the low 5,000s for the ES, well, that opens the door for 30, 40, 50 points of downside risk. Now, you'll note that when we get a sell signal with an uptrend in place, it offers an opportunity to re-enter a buy if we break back up above those highs of 50, 55, which would be what would be required to tell us this is not going to turn back down. Nonetheless, I will put to you, the risk of a move down is still clear and present because we've already achieved the target on the daily chart, and we've seen perforations, change in slope of the 4-hour chart. We saw it turn down earlier in the week, of course, and of course turn back up, but now starting to flatten out. With the negative momentum shift and the sell signal, a cautionary tale at a minimum for active traders into the beginning of next week. And of course, through the long holiday market weekend. Now, I hope that this has helped give you some perspective that downside risk is still present unless we see this market take out that 50, 55 area on the ES. Tomorrow, I'm going to be doing a very special session, and it's a follow-up effectively to the session that was conducted this past week on Wednesday. Folks raved about the toolkit that we described, showed, and I've just shown you on screen again. And I'm going to be doing a follow-up session to that. It's going to happen tomorrow, Saturday, February the 17th, starting at 10 a.m. Eastern Time. It is the last in the series. It's a do not miss. It's not a recorded session. And I'm going to be using straightforward, high probability strategies to show you where the market move is likely to go on a variety of markets, a variety of individual stocks, and examples that are a little different than what we saw on Wednesday, to round out the insight on how an award-winning, competition-tested toolkit of strategies can help a trader make better decisions day in and day out. Looking very much forward to seeing you at that session. Starts at 10 a.m. Eastern Time tomorrow, Saturday, February the 17th. Simply go to becomeabettertrader.com/yes or click the link in the emailer. Have an incredible holiday market weekend, and I look forward to starting it off with you tomorrow morning on the right foot. Bye for now, all.